check your accounts. Today is April 28th, and while your CPP and OAS payments just landed, something much bigger happened in Ottawa. Finance Minister François-Philippe Champagne just dropped the spring economic update. The government is promising affordability. But is it real relief or just a pre-election coat of paint? Tonight, we're stripping away the political spin to show you exactly how your pension, your gas bill, and your retirement savings are changing. First, the shocker, the federal deficit. Last fall, the government projected a massive $78 billion hole. Instead, they're coming in way under budget. How? 2 words: oil and resilience. High energy prices, fueled by global conflict, stuffed the government's tax coffers, and the Canadian economy stayed tougher than the experts predicted. Prime Minister Carney says they're on top of the numbers, but critics wonder if they just got lucky with the price of a barrel. The gas break. As of last week, the 10-cent federal tax on fuel is gone. This lasts until Labor Day. If you're driving to see the grandkids this summer, that's hundreds of dollars staying in your wallet. The GST boost. Starting this July, the GST credit is getting a 25% hike for the next 5 years. For a single senior making $25,000, that's a $950 yearly benefit, automatic and tax-free. The grocery check, mark June 5th on your calendar. A one-time payment of $267 will hit your account to help with the checkout aisle sticker shock. The RRF rescue. For 1 year, the government is slashing the mandatory RRIF withdrawal limit by 25%. You now have more power to keep your money invested rather than being forced to take it out in a shaky market. The GIS top-up. Low-income seniors will see a 5% increase this year, up to $652 extra. Again, no paperwork required. The biggest headline is the new Canada Strong Fund. It's a $25 billion sovereign wealth fund. Think of it like a national savings account that invests in energy and minerals. The twist? They want you to invest too. Carney is planning a retail product, kind of like a modern victory bond, where you can buy in and earn dividends. But here's the catch. Unlike Norway's famous fund, which was built on extra cash, Canada is building this one on borrowed money. Is it a visionary move or just a $25 billion addition to the national credit card? Now, for the part Carney doesn't want you to focus on. Even with better numbers, we are still staring at a $65 billion deficit. The RRIF relief, the GIS boost, they are only guaranteed for 1 year. Pierre Poilievre and the critics are already sounding the alarm, calling this a band-aid on a bullet wound. They argue that until we cut the red tape, no amount of strong funds will fix the economy. The money landing in your account today, the CPP, the OAS, is real. The fuel savings are real. But the long-term plan, that's still a work in progress. What do you think? Is a 10-cent break at the pump enough to earn your trust, or are you worried about the $65 billion debt? Let me know in the comments. If you want the truth behind the numbers, you need to be subscribed to Canada Today News. Hit the bell, share this with a friend, and stay informed. I'll see you in the next one.